Hi everyone, welcome back to Be Rich. So, what have we discussed so far? We talked about growth mindset, and we spoke about how about financial planning and inflation. Now, what do we talk about? Well, what we talk about is what is your savings level. Some of us have low savings level, some of us have moderate savings levels, and some of us have high savings level. Savings levels is nothing but amount of money you can salt away towards your investment. The reason why I'm taking it as low savings, moderate savings, and high savings is someone might be getting a high salary. That doesn't mean they can save because currently they have such a situation in life they can only save a little from that high salary. Some of you might have a low salary, but you're able to take your entire salary and save it monthly. So I thought, just broadly speaking, we'll talk about 5,000, 50,000, and why not push it to 5 lakhs. I know there's very few of my viewers who can put 5 lakhs a month, but just for the argument's sake, aspiration, is nothing wrong in having aspiration in life. If there's no aspiration and hope in life, then life becomes quite pointless and melancholy. So let's keep 5 lakhs up there. It's something we all aspire to do. Get to a stage where even Kesar can put 5 lakhs a month into savings. What, Kesar? He's shaking his head vigorously, saying, yes. I would love 5 lakhs a month. So low savings is 5,000 rupees a month. Let's say you're only able to do 5,000 rupees a month. The first thing I would aim you to do is 3 to 6 months worth of expenses to keep it away in your kitty. And if you've not done that, first to build on that. Spend all of that 5,000 rupees towards creating your emergency fund. Next, sir, I've created my emergency fund. You meet me 6 months later. You meet me 10 months later. I managed to do this, sir. I managed to put money aside and I've kept it there. What do I do next? Next thing I wanted to do is pay off all your high interest debts. Those are credit card debts, personal loan debts, anything which has a high interest rates, put them all down, starting from the highest interest rate to the lowest interest rate, and start ticking off all one by one till you remove all your debt. Then, once you've done these two, your next investment class should be very conservative. Low risk options. Low risk options are, I would say, to start with, a passive index fund, something like a nifty UTI fund. You put a little bit in that every month and you start collecting. Once you've collected an amount, let's say, of 1 lakh, so your units in our mutual funds are now worth around a lakh, you pull that out and you make that into a bond, and that sits. And that bond gives you interest on a yearly or a monthly basis, and that sits and that accumulates. And then you start again putting into mutual funds, and your NAV is one again, it's a lakh, take it out. Now you have 2 lakhs worth of bonds. Repeat. Keep doing this till you reach moderate savings levels. Moderate savings levels is now you're able to put 50,000 rupees a month. So either you've changed jobs or your situation is improved. Your wife and you are now have dual income. You're able to collectively put 50,000 rupees, or your bond portfolio has grown to such capacity now where it's contributing by itself every month 20, 30,000 rupees. Adding on to that, you add more, and now you're coming to around 50,000. Now you start diversifying your portfolio. You start looking at stocks directly. You start looking at other maybe mutual funds if you want to, which I won't suggest. But if you want to, you can start exploring, and you can start looking at individual stocks, is what I would say. You can look at companies like Anand says, different coffee range. You can start doing research, and you're starting to become a seasoned investor. You're not a saver anymore. You're becoming a seasoned investor. You now know what you're doing. You have had a little bit of experience. You don't have any more debt. You have some monthly emergency money saved. You've got yourself some insurance. From being a little bit conservative, extremely conservative, you can start exploring and have a little more appetite for risk. So this is at where you're at moderate savings. And you can start looking at your retirement plan. You can start thinking, putting away for your retirement. And if you have children, you can start looking at their educational goals, saving towards educational goals. And let's say you have other goals like buying a car or buying a house, you can start slowly thinking about that. I would say most of my viewers who I've been chatting with too in Instagram and LinkedIn and Twitter, you'll probably fall into this bracket. Most of you seem to be in a situation where you have a dual income, or you are in a position where you have enough income where you're able to invest 50 to 60,000 rupees. That's why I tell you guys to look at the options of buying into bonds immediately, and even mutual funds. I start sipping and passive index, and also start looking at stocks directly. Most of you have long-term horizons. That means in horizons over 10, 15 years is what is I consider long-term. When you have an horizon of 10, 15 years, people from the age of 20 to the age of 55 have the same horizon. That is long-term horizon. People at 20 are very lucky. They have 15 years, which is the long term, plus they can add another 20, 30 years to it. People who are 55 have that 15-year horizon. Maybe if they're lucky, they can push in another 5, 10 years in, depending on the kind of job they're in. So that's how long-term horizon is what I'm talking about. And most people who I'm talking to can look at long-term horizon. That means if you're at 55, I'm not excluding you. You're very much included in this conversation. So think about this. Now, let's say we get into people who are very, very wealthy and they're able to put a couple of lakhs into their investment plan. People who are at this range can definitely look at various instruments such as short-term funds, long-term funds. They can look at active managed funds if you are interested in that. But if you are at this range, I would strongly suggest that you look at stocks per se and not look at funds at all. And most of your funds should either be in bonds and in individual stocks and companies is what you should be looking and tracking at. Because the kind of money you're talking about, monthly putting 5, 6 lakhs, yes, if you are able to put 5, 6 lakhs a month, you can be far more aggressive and you should have a big appetite, risk appetite, because if you're able to put 5, 6 lakhs or even 1 or 2, 3 lakhs into your investment portfolio, you have quite a huge income and quite a large pool already should be there with you with this kind of asset class. I'd be very surprised if you are able to invest every month 1 lakh or more and you come back to me and you say, sir, I have zero investment. That means you're being very reckless to be at that kind of stage in life where you're ready to invest 1 lakh a month and you have zero savings. That would be a very strange situation for me. And I would really have to look and talk to you and investigate why you could be in such a situation to begin with. So these are the 3 basic categories which you can look at. And like I said, estate planning is very important, like in the previous video. Keeping an eye on inflation is important, like I said in the previous video. And like I said in the first video, having the growth mindset is most critical, and being agile and adapting and educating yourself all the time. So some of the things which I wanted to touch upon is some basic principles you should have across all 3 levels. Is one, you should have idea on your risk tolerance. Like I said, your investment in your wealth creation should not give you anxiety, should not be keeping you up all night. If it is doing that, please stop doing it. Your health is paramount. Your health is what is most important. If you're not there to enjoy the wealth which you've created, the freedom you've managed to get to yourself, then there's no point. So please do keep your health in check, lower your anxiety levels, and make sure your stocks and your investments are not adding to your anxiety. Another thing which you should check, aside from risk tolerance, is investment horizon. That is to know each of your assets which you've invested into, what is the investment horizons for that per se, and also personally, what is your investment horizon, what you're looking at, where your goals are. Number 3 is to regularly check your portfolio. You cannot invest in anything and forget about it. You have to regularly keep checking. Even if it is real estate, you should keep your property in shape. You should make sure your property is maintained, that whatever rental yield it's giving, it continues giving that. And if your property is aging, what do you need to do if it is aging? All these kind of things are involved even in real estate. So just don't think if it's a real estate, I can buy it and forget about it. That's rubbish. It's like buying a car. It's very disheartening to see, I'm sure, for all our viewers, when you see a car which is disheveled in the road, which has not been washed, which is completely covered with all kinds of trash, and is being driven still. It just breaks our heart as a car enthusiastic or a bike enthusiastic to see a vehicle which is not maintained. Same way, it is very sad to see a house which is not maintained. If it's not your personal house, if it's a house which you're putting up for rent, please do take care of it. Even if it means you're renting that house as a hostel, do take care of your property. So this is what I mean when I say you should regularly look at your portfolio. And number 4 would be to seek professional advice. Have a financial advisor, have an auditor, have a financial advisor. It's very critical that you keep a tax plan in mind and you have a financial advisor to keep you abreast with what is happening with the current regulations, current rule changes. These things keep on changing very dynamically and very rapidly in the market. like taxes and capital gains and short term gains. So have someone on your payroll. It's good to have someone on your service. Like you always need a good doctor. Having a good financial planner and a good auditor is critical, is what I think. So please do seek professional advice and continuously keep learning. Keep consuming, keep reading, keep learning. I can't stress on that enough. If you don't learn, you will not grow. And wealth is grown by education. Trust me on this. I know this from personal experience. If you don't read and you don't expand your mind through conversations and engagement, you will not grow. And your investment and your wealth will not grow. I hope you have understood and enjoyed the series so far. And I'll see you in the next one soon. Bye.
So after Kuwait, my team has decided to do an event in Trivandrum. Those who are desirous of meeting me in Trivandrum can contact our team at trivandrummp@gmail.com, the mail ID given below, or the WhatsApp number given below. My team would fill in you with the details. The event would be in January 2024. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.